Welcome back to Stocks and Trades channel. We provide easy to digest information in short videos about stock market investing, personal finance, money saving, and building wealth. Our content is designed to help you achieve financial freedom sooner. U.S. equity markets rebounded this week, after 2 weeks of losses, as investors were able to climb two key walls of worry: the path of the Federal Reserve and the path of the COVID-19 virus. We will likely get more clarity on both issues in the weeks ahead, with investors digesting both the December Federal Open Market Committee meeting next week, as well as incoming data around the Omicron variant, which thus far appears less severe than originally expected. Today's video will provide news, insight, and investment suggestions on the week ahead. We'll analyze 2+1 stocks to watch this week and some others that will be volatile. So, let's begin. Disclaimer. All trading involves risk. Only risk capital you are prepared to lose. Past performance is not an indication of future results. This content is for educational or entertainment purposes only and is not investment advice. Our first stock type is dividend earning stocks. These are a great way to earn passive income. This week's suggestion is Philip Morris, with ticker symbol PM. Incorporated in 1847. The New York-based Philip Morris International Incorporated is a leading tobacco company that manufactures and sells cigarettes, tobacco, nicotine-containing products, smoke-free products, and related electronic devices and accessories in over 180 countries. The company's most popular and best-selling brand is Marlboro. The company also offers IPOs smoke-free products, including heated tobacco and nicotine-containing vapor products. Through multidisciplinary capabilities in product development, state-of-the-art facilities, and scientific substantiation, the company aims to ensure that its smoke-free products meet adult consumer preferences and rigorous regulatory requirements. Management's vision is that these products ultimately replace cigarettes. Jacek Olczak is its chief executive officer since May 2021. Some technical analysis data shows that Philip Morris's return on equity is -94.3%, its asset growth is 6.29%, its average volume is more than 4.14 million, its market cap is more than $140.1 billion, its beta is 0.86, its PE ratio is 15.6, and its EPS is $5.75. Despite our rating as 7, we consider this stock as a strong buy. Philip Morris has reported strong results for the third quarter ended on 30th of September 2021. The robust results were primarily driven by the growth witnessed in net revenues. It also reported quarterly net revenues of $8.1 billion, up 9.1% from the prior year's figure of $7.4 billion. Moreover, the figure surpassed the Street's estimate of $7.9 billion. Based on experienced analysts offering 12-month price targets for Philip Morris in the last 3 months, the average price target is $110.40, with a high estimate of $116 and a low estimate of $105. With current price at $90.04, this would mean about 22.6% average profit over the next year. The company has increased its quarterly dividend by 4.2% to an annualized rate of $5 per common share and has recorded 13 years of continuous dividend growth. Having a dividend yield of 5.56%, the board of directors of Philip Morris declared a regular quarterly dividend of $1.25 per common share, payable on 10th of January 2022, to shareholders of record as of 23rd of December 2021. The ex-dividend date is the 22nd of December 2021. Our second stock type is growth stocks. A growth stock is a share in a business that's shown above average earnings and has the potential to grow faster than the overall economy. This week's suggestion is PayPal, with ticker symbol PYPL. PayPal Holdings Incorporated is a digital payments platform that enables its customers to send and receive payments. Its solutions include PayPal, PayPal Credit, Braintree, Venmo, Zoom, iZettle, and Hyperwallet products. The firm manages a two-sided proprietary global technology platform that links customers, which consist of both merchants and consumers, to facilitate the processing of payment transactions. It allows its customers to use their account for both purchase and paying for goods, as well as to transfer and withdraw funds. The firm also enables consumers to exchange funds with merchants using funding sources, which include bank account, PayPal account balance, PayPal credit account, credit and debit card, or other stored value products. It offers consumers person-to-person payment solutions through its PayPal website and mobile application, Venmo, and Zoom. The company had 377 million active accounts at the end of 2020, including 29 million merchant accounts. Established in 1998 as Confinity, PayPal went public through an IPO in 2002. It became a wholly owned subsidiary of eBay later that year, valued at $1.5 billion. In 2015, eBay spun off PayPal to eBay's shareholders and PayPal became an independent company again. The company was ranked 134th on the 2021 Fortune 500 of the largest United States corporations by revenue. Dan Schulman is the President and Chief Executive Officer. Some technical analysis data shows that PayPal's return on equity is 24.33%, its asset growth is 13.65%, its average volume is more than 11.5 million, its market cap is almost $221.5 billion, its beta is 1.16, its PE ratio is 46.1, and its EPS is $4.16. Our rating is 9 and we consider this stock as a strong buy. Based on experienced analysts offering 12-month price targets for PayPal in the last 3 months, the average price target is $276.07, with a high estimate of $342 and a low estimate of $190. With current price at $188.51, this would mean an almost 46.5% average profit over the next year. PayPal posted its quarterly earnings data on 8 November. The credit services provider reported $1.11 earnings per share for the quarter, beating analysts' consensus estimates of $1.07 by 4 cents. It also had revenue of $6.18 billion for the quarter, compared to the consensus estimate of $6.24 billion. PayPal had a trailing 12-month return on equity of 19.75% and a net margin of 20.09%. The company's quarterly revenue was up 13.2% on a year-over-year basis. Our third stock type is blue chip stocks. These are typically large, well-established and financially sound companies that have operated for many years and that have dependable earnings, often paying dividends to investors. This week's suggestion is Walmart, with ticker symbol WMT. Walmart Incorporated engages in the operation of retail, wholesale, and other units worldwide. The company operates through 3 segments: Walmart US, Walmart International, and Sam's Club. It operates supercenters, supermarkets, hypermarkets, warehouse clubs, cash and carry stores, and discount stores, membership-only warehouse clubs, e-commerce websites, and mobile commerce applications. The company offers grocery products, including dry grocery, snacks, dairy, meat, produce, deli and bakery, frozen foods, and alcoholic and non-alcoholic beverages, as well as consumables, such as health and beauty aids, pet supplies, household chemicals, paper goods and baby products, and health and wellness products covering pharmacy, over-the-counter drugs and other medical products, and optical and clinical services. It also provides gasoline stations and tobacco, home improvement, outdoor living, gardening, furniture, apparel, and jewelry, as well as tools and power equipment, housewares, toys, seasonal items, mattresses, and tire and battery centers, and consumer electronics and accessories, software, video games, office supplies, appliances, and third-party gift cards. In addition, the company offers fuel and financial services and related products, including money orders, prepaid cards, money transfers, check cashing, and bill payment. It operates approximately 11,400 stores in various e-commerce websites under 54 banners in 26 countries. The company was formerly known as Walmart Stores Incorporated, and changed its name to Walmart Incorporated in February 2018. Walmart Incorporated was founded in 1945 and is based in Bentonville, Arkansas. Doug McMillon has been the president and chief executive officer since February 2014. Some technical analysis data shows that Walmart's return on equity is 9.8%, its asset growth is -2.4%, its average volume is about 8.07 million, its market cap is $391.2 billion, its beta is 0.51, its PE ratio is 48.3. And its EPS is $2.87. Despite our rating as 7, we consider this stock as a strong buy. Based on experienced analysts offering 12-month price targets for Walmart in the last 3 months, the average price target is $172.11, with a high estimate of $196 and a low estimate of $150. With current price at $141.03, this implies a 22% upside potential over the next year. Walmart issued its quarterly earnings data on 16 November. The retailer reported $1.45 earnings per share for the quarter, beating the consensus estimate of $1.39 by 6 cents. The retailer had revenue of $140.5 billion for the quarter, compared to analysts' expectations of $134.26 billion. Walmart had a trailing 12-month return on equity of 20.3% and a net margin of 1.4%. Walmart's revenue was up 4.3% compared to the same quarter last year. Walmart pays an annual dividend of $2.20 per share and currently has a dividend yield of 1.59%. Walmart has been increasing its dividend for 47 consecutive years, indicating the company has a strong commitment to maintain and grow its dividend. The dividend payout ratio of Walmart is 76.92%. Payout ratios above 75% are not desirable because they may not be sustainable. Based on earnings estimates, Walmart will have a dividend payout ratio of 32.64% next year. This indicates that Walmart will be able to sustain or increase its dividend. Next week, many companies are going to release their earnings reports, which is one of the most potentially volatile times of the year for equities, and if we are not careful enough, we could put our entire portfolio at risk. Companies may announce earnings or losses and stock prices may go up or down significantly. For this reason, we suggest that you avoid or carefully consider opening a position for the following stocks during next week, and wait to evaluate the earnings announcement before deciding to invest. Edessa Biotech will release earnings on Monday 13 December. Aspen Group will release earnings on Tuesday 14 December. Trip.com Group and Nordson Corporation will release earnings on Wednesday 15 December. Accenture, Adobe, and FedEx Corporation will release earnings on Thursday 16 December. Finally, Winnebago Industries will release earnings on Friday 17 December. Watch these stocks' prices carefully and think twice before making any decision. Next week will not be that popular among dividend stocks, but we have some interesting options to suggest. Monday 13 December is the ex-dividend date for 12 stocks, including HCA Healthcare and Camping World Holdings. Tuesday 14 December is the ex-dividend date for 146 stocks, including Domino's Pizza, Garmin Merck & Company, Motorola Solutions, Thermo Fisher Scientific, Viacom CBS, as well as Wyndham Hotels and Resorts, among others. Wednesday 15 December is the ex-dividend date for 27 stocks, including American International Group, ST Microelectronics, and ADT. Thursday 16 December is the ex-dividend date for 66 stocks, including Taiwan Semiconductor Manufacturing Company, Western Union, Burberry Group, and Dole. Finally, Friday 17 December is the ex-dividend date for only 23 stocks, including DTE Energy and RPT Realty. Be sure to buy any of the above stocks before the market closing of the ex-dividend's date previous day to benefit from the dividend payment. A few initial public offerings have been arranged for next week. Samsara Incorporated, with ticker symbol IOT, will be listed in New York Stock Exchange. There are 35 million shares offered at a price between $20 and $23. Samsara is an American Internet of Things company headquartered in San Francisco, California. It provides hardware and software for connected operations. It develops a cloud-based platform to assist fleet operators with software solutions to improve the safety and efficiency of their transportation systems. Samsara achieved unicorn status in March 2018 after a funding round led to a valuation of over $1 billion. Another funding round later that year rose the valuation to $3.6 billion, backed by Andreessen Horowitz and General Catalyst. Samsara expanded internationally and opened an office in London in 2018, which expanded into its European headquarters in 2019. Samsara also expanded their footprint domestically into Midtown Atlanta with a new East Coast office location. A Series F funding round saw Samsara's valuation rise to $6.3 billion, with Tiger Global Management and Dragoneer Investment Group joining for the first time. Finally, Samsara has a market cap or net worth of $10.76 billion and the enterprise value is $10.64 billion. In the last 12 months, Samsara had revenue of $378.53 million and minus $138.44 million in losses. The company has $267.5 million in cash and $149.01 million in debt, giving a net cash position of $118.49 million. In the last 12 months, operating cash flow was minus $156.7 million, and capital expenditures minus $12.7 million, giving a free cash flow of minus $169.4 million. Gross margin is 71.74%, with operating and profit margins of minus 36.3% and minus 36.57%. Fresh Vine Wine Incorporated, with ticker symbol VINE, will be listed in New York Stock Exchange American. There are 2.2 million shares offered at a price between $9 and $10. Fresh Vine Wine is a premier producer of low-carb, low-calorie premium wines in the United States. They craft and bottle all of their wines in Napa Valley. Offering bold, crisp, and creamy wines that embody health, warmth, and a deeper connection to wellness and an active lifestyle, they offer a unique and innovative collection of today's most popular varietals. Also, they intend to further expand their portfolio of product offerings in the future. Among the company's co-founders are celebrities and business partners Nina Dobrev and Julianne Hough. Finally, Vine has a market cap or net worth of $115.9 million and the enterprise value is $115.28 million. In the last 12 months, Vine had revenue of about $678,000 and minus $7.21 million in losses. In the last 12 months, operating cash flow was minus $1.53 million and capital expenditures minus $250, giving a free cash flow of minus $1.53 million. Gross margin is 24.58%, with operating and profit margins of minus 1,063.18% and minus 1,063.05%. If you find this video useful, please like it, leave your comment below, share to a friend and subscribe to our channel. See you next time.